The Game Plan. My name is Gareth Soloway, Chief Market Strategist, coming to you live from the Verified Investing Studios in Florida. Hope everyone's doing well. We've got a lot to discuss today. Yesterday, Jerome Powell, some very hawkish comments, but stock market prices are up today. I'm going to tell you why that's the case, along with lots of earnings news. We are getting into earnings, so let's get started, guys. Nice. All right, right into the back action. I was going to say right into the bat we go, but let's get into this action. So here we have Verified Investing's homepage, guys. Now, the key is, remember, on this homepage, not only is there constant news updates on the side right here, all the keys, 10-year yields may have topped. We're going to talk about that. But then scrolling down, don't forget, you have lots of charts, Verified Pro charts. You then go down to economic charts, and even below that, you got your earnings calendar as well as your economic calendar. So it's really your one-stop shop. I'm looking to add in insider buying and selling charts as well that'll be updated almost daily as well. So you guys make sure that you have all the information you need to make informed, data-driven decisions. No hype, no nonsense, just data. That's the key, guys. That's honestly how I became a decent trader, is by ignoring all that other stuff. Okay, so let's get right into it here. What we're going to do is we're going to look at the morning blast, which covers all the key data points of the morning, what's moving the markets. Let's scroll down here. And the first thing I see is that Jerome Powell's comments yesterday were extremely hawkish. The market ignored it. Now, why did the market ignore it? Let's break that down. So basically, yesterday, Jerome Powell, to summarize the comments, he said inflation is still too high. Inflation's going in the wrong direction. The Fed may not be able to do rate cuts this year. All of these negatives, all of a sudden. Remember, about a month ago, we had a Federal Reserve decision where he was unbelievably dovish and the markets rallied. I think they even made new all-time highs on that. But here we have him doing a 180, and the markets honestly shrugged. Now, why? Because if you looked at the last 3 weeks, multiple Federal Reserve officials have come out with comments, and they've been basically guiding the markets to anticipate a much more hawkish Fed. And so by the time Jerome Powell made these comments yesterday, the market was already anticipating what was going on. And the reason we knew this, by the way, is because if you look at the Fed funds tool, the watch tool, which tells us how many interest rates the market expected, yesterday, going into his comments, it was 1 to 2 rate cuts this year. Afterwards, it's still 1 to 2 rate cuts. So the market had already priced that in. All right, next up, we have United Airlines here, guys. So United Airlines jumps 5% on the back of earnings here, better than expected forecast as well. And again, this is a stock that had been kind of driven down for the last 2 weeks, getting a little bit of a bounce back today, not back to its recent highs, but nonetheless getting a bounce back. Travelers drops 3% pre-market after the catastrophic losses for the company jumped sharply due to inclement weather increasing. So this is a case where, listen, if you live anywhere in the world, frankly, you notice that there's more tornadoes, there's more storms, there's more this, there's more that. And that ultimately is being harder for these insurers to price in about how bad it's getting. And that's, in this case, causing Travelers stock to drop. The other thing I want to show you here, and I'm going to flip over to my charts because I do think this is worth noting. If we jump over to the Travelers chart, let's look at this. Look at the pattern formation, because again, it didn't really take a genius to know that they might not go up on earnings. And again, listen, 3% drop is not a big drop. But nonetheless, look at the chart. Look at the long-term trend line, how price for literally since last October was hitting this line, just continually going up. It was almost controlled, right? I mean, when I look at this, I say, wow, that's almost no volatility, and it's just very tight up and to the right. But then what did we see in the last couple weeks? We saw a breakdown with confirmation. And what type of pattern formation was that going into earnings, right? So you have a drop, and then you have this sort of pattern. All right, now if you know your technical analysis, which again we teach here at Verified Investing, this is a classic bear flag consolidation pattern. So going into earnings, you had that pattern. What is the result of that pattern on probabilities? What does it most likely do? Most likely it trades lower on the back of that. So again, TA, if you just kind of knew it, by the way, does it guarantee us that it's going to do that? No. I mean, there was always about a 25-30% chance it could have gone up, but the heavy probabilities, the house was in control here of the casino, right? The casino versus the gambler. The casino was basically had the odds favoring the downside, and that's exactly where we went. Okay, so that's one of the things that I wanted to just bring up there in terms of the chart action. We go back to the headlines here. We have more negativity going on here. JB Hunt, which is a transportation stock, dropping 7% after the firm missed first quarter estimates. This was due to pricing pressures and a decline in revenue for the company's biggest segment. Now, to me, these are two of the things that jump out at me. So number one, it's a transportation stock. That is a core to the U.S. economy, right? So if you're looking for earnings numbers today or things that might raise alarm bells, this report today would be that report. And again, number one, it's a transportation stock. Number two, pricing pressures. What does pricing pressures mean, guys? So this means that their costs are going up and they're not able to raise prices as much. So inflation plus competition, all right? In addition, what are we seeing here? Decline in revenue in the company's biggest segment. That means that their demand, the demand for this segment is dropping. So you're seeing economic pressures, meaning that maybe we're seeing a slowdown being a transportation stock. Also, potential inflation pressures. Basically, that's the boogeyman. If you bring that into the U.S. economy, you get what's called stagflation, which is where inflation stays high, but the economy starts to do more poorly. And again, for those of you that don't know about stagflation, it's something that very rarely occurs. But when it occurs, it is literally like the worst scenario of all. It is the worst scenario of all because usually when inflation increases, you get economic growth to increase. So if I see my prices at the store going up and the economy is doing well, I'm making more money, so I can offset and still buy those goods because I'm making more money. If I lose my job and inflation is still going higher, what happens? The worst of all scenarios, things become much pricier for me and I cannot afford it. Okay, so going back to a couple other headlines here, and we'll look at the JB Hunt chart in just a minute. It looks like I just misspelled that, but no big deal. ASML. So right here, ASML is a chip stock. Now, the kicker here is this is really important, guys. All right, so if we go here, ASML is a Dutch chip maker that basically supplies equipment to computer chip makers. And again, this would be supplying to NVIDIA, AMD, and other players. Now, the reason why this is an issue, and granted, it's falling 5% pre-market, but the reason why this stands out to me as well is because what does this tell us? This tells us that there may be a slowdown in demand, right? So what they're saying is there's a sharp drop in bookings right here, and that sharp drop essentially means that demand for their components that go into these chips is falling. And if you extrapolate that out, you could make a case that says maybe the demand for these AI chips is starting to kind of wane just a little bit, and they're seeing that. And the other thing to note here is they made a specific comment to say that China sales held up, because the normal economists or analysts would say, oh, well, yeah, I mean, ASML, they saw a drop in demand because China, it's all China's problem. It's no problem, the U.S. is fine, but China or the rest of the world is fine, but it's China's slow economy. Well, right here, they're saying that's not the case, right? So where else are we seeing weakness? And this either has to be within Europe or the U.S. or both. And that is an issue as well. Lastly, Tesla stock rose significantly after the company announced shareholders would be able to vote here. And I should say it rose slightly. And this is the kicker, guys. So this has been going on for a long time. Elon Musk was promised $56 billion in pay if he achieved certain milestones. And listen, ridiculous number. But if you guys remember, maybe you don't remember, when this deal was made with the company, that he would get $56 billion in compensation, everyone laughed at him because the company, I believe, was well under $100 billion market cap, and he basically had to grow it north of $650 billion within a few years. And so everyone was like, oh my God, he's such an idiot. I can't believe he's making this deal. There's no way he could achieve this milestone, and he's not gonna get paid a dime, if he doesn't. Holy cow, he's such an idiot, right? Well, he achieved it. And then what happens? The company basically went to a judge, and the judge said, you know what? This is too much. Throw it out. Well, listen, is $56 billion ridiculous? Yes. But at the same time, you made a deal, and everyone laughed at him for making this deal, and he achieved it. Now, could you argue that it was because of all the subsidies that they've gotten, maybe that helped their business? Could you make a case that, oh, it was, the printing of money that helped this stock go north in 2021? Yes, that's probably all there. But you know what? The company itself should have thought about that and shouldn't have made the deal. I'm a big believer that when you make a deal, you hold up to it. As crazy as it is, we'll find out what shareholders think. But that's just my 2 cents. Okay, let's get into our drawing here real quick, guys. Remember, yesterday we had Lux Algo, a 1-year premium subscription, and bear with me as I bring this up here for our drawing tool, and we're going to find out who wins that 1 year of Lux Algo Premium. And we're going through all those amazing comments that you left yesterday, and then we'll spin the wheel in just a couple minutes. All right, winner today, guys, is... Here we go, Bill Hoffman 778. I got an easy name to say, Bill Hoffman 778. So congratulations, buddy. Reach out to Lawton at verifiedinvesting.com, and he'll get you all hooked up with 1 year of premium Lux Algo on TradingView. Congratulations. All right, so let's get right into some more charting here. So the first thing to talk about is why are the markets up today? We talked about this. So number one is the markets had anticipated these hawkish comments, so that's why we didn't sell off yesterday afternoon. The other thing is this. This is a chart of the 10-year yield, and in this very game plan yesterday, I highlighted the max upside I thought the 10-year yield would go before we put in a top. And sure enough, what did we do? Yesterday, we went right there. Take a look at that, guys. Look at this. Right to that line right there, and look at yields pulling back today. The market wants yields down, and they're getting their wish today, which is why the S&P futures are higher across the board. All right, now if we look at this chart, it's a very simple thing, right? You don't see, when you come to Verified Investing and you watch the game plan, or you look at my services on Verified Investing, I don't complicate things. I keep them so simple, like literally a caveman can look at this and figure it out, right? Here's your channel, resistance, 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 right? So I just use the law of probabilities, and I look at history to determine, and that's really what technical analysis is all about. So we hit here, we pulled back here. We then hit that lower line, we went up here, then we went here, and then you kind of came back, and then finally you got the big surge up. What is the most likely outcome for yields? Well, again, just look at history. Super simple, right? That should be what ends up happening. So again, I actually wrote an article today, you can find it on the homepage of Verified Investing, talking about how I believe yields are now going to pull back a little bit here, and this actually could be a top in yields, right? If you think about it, you probably just achieved max hawkishness from Jerome Powell. When he's the most hawkish, that's when the time is for yields to top. And when he's the most dovish, that was the time where yields actually started to go up, right? If we think about it, when we were down here on yields, right, when we were trading in the high threes, that was when he was most dovish. We were expecting 6 rate cuts. We were thinking, oh my goodness, perfect landing, no problems at all. All of these type of things. So all of those type of factors were actually when the yields were bottoming down here, and you had to turn bullish on yields. Now he's at max hawkishness, most likely, and I say this because, listen, no one knows for sure, but based on the TA, that would tell us that we should see a pullback in yields. All right, so that's just a little update here. Yields, again, pulling back to 4.614%. I did buy with members in in Smart Money crypto, not Smart Money crypto, Smart Money stocks and ETFs. I did pick up this TLT, which again rallies when yields drop. So again, look at that pattern. It's the inverse of what we had. And in the service, Smart Money stocks and ETFs, we went long right down here yesterday, right on this little pierce, and we're already trading up here today on the TLT. So TLT for me is one of the ways I play when I think yields are going to fall. You buy TLT. Generally, when you think yields are going to go up, you short TLT, okay? Just simple inverse, essentially, type of play. Yes, the TLT is the 20-year, but it basically moves the same. It's rates, and they're generally moving together. All right, looking at the S&P 500 here real quick, let's go over that. We still see this tight wedge that broke down. We continue to have a slightly lower move. Today, we're bouncing back, but basically at this point, we've broken this. Even if yields pull back significantly, the one scenario I could see would maybe be rising back into this area here, right? This little area here, but that would then be a case for the next leg lower. Once this has broken, you'll get significant bounces, but ultimately you go lower. That's just the probability factor in the chart. So yeah, you could get some bounces, and they can even be big bounces, but ultimately you could go lower. Now you might say, well, if rates are going to go down, let's say rates go back to 4.5% or 4.25%. why would the markets eventually sell off if rates are going down? The key is to understand how rates determine things. So when the economy is strong, the market craves low interest rates. The problem is if the economy weakens and you still have inflation north of 3%, and Jerome Powell made this crystal clear yesterday, they're not cutting rates unless we see inflation starting to come back down. Okay, so if you get in a scenario where the economy starts to deteriorate quickly, and we're going to know by the jobs reports in a couple weeks, then you could be in a scenario where yields could actually go down and the stock market could also go down. That's, again, going to be a key, something to watch, and of course I'll cover it here on the Verified Investing Game Plan. All right, a couple other things here to just go over. UAL, again, if we go to our pre-market data, you can see the stock is trading up. Here was earnings yesterday after the bell. The stock is trading at 44.25. If we look at the chart, and I talked about this in the market blast here. If we look at this, right, here you had this down move where we were all the way up to 49 and we went to $40 basically. So going into earnings, expectations were lower because the price of the stock had gone down. They did really well. Where are we trading? We're really just back in this range. The only level I see which would be a potential opportunity for a day tradable short today, which we'll be doing in the Apex Live day trading room, would be probably around this level. And this would still be a high risk level, but 44.85, 44.85-ish to 45 bucks. There's a little pivot low here. If we stretch it right across from this low right here to this high, that would be the one area where maybe I'd think about it. But even that, to be honest, I don't like doing shorts when you're not at recent highs. Again, you don't have that major double top, so this would be a little bit of a higher risk short level. Quickly going to TRV. If we talked about this already, here's your pre-market data. You can see it's trading down about $10 to $12 here on the day. So decent little fall on Travelers. And again, we talked about why that stock is falling just a few minutes ago. ASML, which is that chip maker, guys, down pretty sharply here. Yesterday closed around 976. We're trading around 933 today, so that's a pretty decent drop on this. The bigger question for me is what does it tell us about the AI chip makers? Does it tell us anything? And obviously we'll hear from them based on earnings very shortly. JB Hunt is getting pounded here today. All right, take a look at that drop. Basically closed yesterday around 185, trading at 167 right now. In terms of levels on this, just looking at levels here, let's take a look. So you do have a double bottom. So there is a key double bottom coming into play right around 165 or below. That might be a quick scalpable opportunity. These are not swing trades. Please understand that, guys. They're not long-term investments, ideas, or signals. This is just strictly for a potential day trade level where you should see some support around 165 today. All right, lastly, Tesla, guys. Tesla, I still am actually, as crazy as this news about this $56 billion pay package is, I still think the stock is due for a little bit of a bounce. It's into this longer-term trend line. Short bounce before it goes lower, though, unfortunately. But again, don't be surprised if you get a little bounce. And lastly, check out this chart on Lulu. Lululemon got pounded on earnings just a couple weeks ago. And if I zoom out, look at this trend line here. Amazing trend line. Lululemon closing at 339 yesterday. Don't be surprised if this gets a little bit of an elastic snapback, especially if markets rally. I could see this trading back to 360, kind of right in this vicinity, or maybe just a little bit above. But look at that drop and look at that long-term trend line. Pretty spectacular. All right, guys, we're going to spin the wheel real quick here. Let's find out what is the prize that we'll be giving away tomorrow, and then we'll get into some other things. Oh, there we go, guys. Kitco, 10 ounces of silver in Bitcoin form. Really cool. And Kitco's a great partner of ours, guys. They've done so much to support us. They are really amazing. And again, as are all of the sponsors on here, NordVPN, Lux Algo. We talked about Kitco, TradingView. These guys are rock stars across the board, and they understand the appreciation, and they're showing it with us to you guys, where we can just give away prizes every single day. So tomorrow, by the end of this stream, I'll give you guys the question, and tomorrow we'll be giving away 10 ounces of silver to some lucky person out there that will win. All right, guys, we're going to take a quick 30-second break to thank Lux Algo via commercial. Thank you guys so much, and I'll be right back with Bitcoin and gold analysis.
Have you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo. Please visit the description below and sign up for Lux Algo today.
Alrighty, guys, we are back. Let's look at Bitcoin. So remember, Bitcoin is still unconfirmed below this major trend line right here. However, it is starting to downtick again. Now, the last few days, if you look at all these last 2, 4, 5 days in a row, we've almost been tagging the low each and every day. And if I zoom in, you can see this a little clearer, right? So if we look at this, here was your lowest point of that first break candle. But look, basically across the board, we've been hammering on this area here. Now, to me, this is a little bit concerning. Now, granted, it has not confirmed, so really probabilities are neutral 50-50. But to be honest, now that we're seeing it unable to reestablish itself above this line, I'm starting to get nervous that this is going to break lower. So just keep a very close eye on it. But again, the one thing that concerns me, and this does change probability slightly to the more bearish side, is that what you're starting to do here is what kind of formation could this be, right? So down move and then sideways chop, right? So if we continue to do this, this does increase. Every day we get more sideways action, it pushes it into the more bearish camp of a bear flag. And that, again, bear flags by their name are bearish. And therefore, you would expect potentially a slightly higher odds of a move to the downside that would actually confirm this low. So again, I'm not ready yet to, really confirmation is the arbiter of everything here. That's what tells you for sure. But I am getting a little nervous about Bitcoin's price here going sideways, that it hasn't been able to recapture this level. One thing to watch today is if the stock market rallies, and let's say we rally today and tomorrow, that is your Bitcoin chance to reestablish back above this level, meaning it's risk on in the stock market. You got to get a bounce in Bitcoin, right? If Bitcoin can't bounce in an up stock market, then that's a big concern. And we also have the halving coming up. Generally around the halving, there is some sort of sell-off. You got to wonder if that's the case. Remember, if we go down, we have a very obvious level of around 52 to 49,000. That would be my general target there. Quickly on ETH's chart, ETH has a couple trend lines. One it hit recently. So if we see this, look at these two parallel lines. If we stretch it back right here, we have that level to right through here, and then right here, and then we broke above and we retraced. So that's hanging in there right now. But if we break below 3,000 and confirm, then it opens the door to potentially going down to levels like around 27 to 2,500 on Ethereum. So I'm going to have to watch this very carefully as well. Now, yes, in my service, I am still short Bitcoin and Ethereum. We covered all of our other shorts. We then went long on the altcoins. We made a bunch of money there in smart money crypto. But I still have these two positions open, as again, I do think that there's still that chance that we're going to get a flush out. And then I'm going to actually look to flip into longs, but only at the right level, right? The dictation here is purely charts. That's why in some of these charts, I was able to go long. And I want to show you that real quick here. Is if we look at the Solana chart, this was just a case in point classic technical level. I actually talked about this, I think last Thursday or so in the game plan. We were trading up here on Solana, and I said, guys, this is your level down here. And I even said, I said, this is where I would want to go long. We went long over the weekend. We already made like almost 20% on it. We took our profits. Now it's starting to hit it more and more, starting to react. And my concern is that we might get another leg lower, which then could bring us down into probably the 115-ish zone would be your next level of support. Okay, so just something to keep an eye on there. Gold real quick. Gold flat to positive today. The topping tail is still fully entrenched here. Topping tails are king until proven otherwise based on TA. Doesn't matter what I think, doesn't matter what you think. The topping tail per 100 plus years of technical analysis, maybe more, that is what it is. It is a bearish signal until proven otherwise. So that's just the nature of the beast. All right, now again, do I still think we're going to 2,500 by year end? Yeah, that was my target at the start of this year. We were at like 1,900 at the time, so it seemed crazy to many people. Here we are at almost 2,400. Looks a lot more likely. In fact, a lot of people would say my target's too low now, but I'm going to stick with it for the time being. Quickly going into oil. Oil, I still think, and I've said this in this game plan, we're still headed back to this 82-ish zone. We're starting to roll over today. Watch for that 82 zone here to get hit, and then we have to watch, does it hold 82? 82 is a confirmed support. It should hold. Again, we got to watch it, though, very carefully. Look at the channel. By the way, does this channel look familiar? Remember the channel we just looked at on the 10-year yields? It was essentially identical, right? So it just shows you that pattern formation and technical analysis is all about just looking for these repeating channels, these repeating trend lines, and they tend to be very accurate. To be honest, you guys are watching this, but if you looked at the whole world of investing, about 0.1% of people follow technical analysis. And so congratulations for tuning in and learning something, because you are basically raising your game to be so much higher than almost everyone else out there. Lastly, natural gas, guys. And if we take a look at nat gas, it's not doing a whole lot today, basically flat on the day. But again, we're still within that band here of support down here and resistance up here. I still favor the long side on natural gas. All right, the question today, guys, here's the question. The question that we're going to do, and I'm going to grab my bat because I love to take one swing before I get to day trading, is the question today is, again, let me know what would be one thing that you would add to our homepage that would be influential, that would be data-driven. It has to be data-driven, something that would be useful. What's one thing that you look at our homepage? Go to our homepage, Verified Investing, look at it, and say, man, this is great, this is great, this is great, but if only it had this, that would be even another thing that would make it even better. Because, again, this is for you, guys. We here are for you, for investors, to make your lives easier, to make my lives easier, because I go to my homepage too here at Verified Investing. So let me know and have a great rest of your day. Let's do this.